Okay, everybody, thank you for tuning in. So let's begin this live session. So it is the 5th of June 2024, and we are 3:30 p.m. UK time. Okay, so what we're going to do is start on the dollar index first of all. Okay, so as we spoke about in the previous live session today at 1:30 p.m., we spoke about the previous monthly low being taken and the potential for strength in the dollar to continue. Okay, just going through those reasons once more. Reason number one is the fact that we are within a discount of this bullish leg. So from the low to the high, we've achieved discount prices. Okay, so below the equilibrium there, below the 50%. So that's reason number one. Reason number two is the fact that we are now within this daily demand once more. Okay, now again, this was the demand that swept the low of this candle before breaking that high, and now we've come back to retest this region. We've had one reaction from there, and now we've come back down. We've took that low out, so that's the previous monthly low. Just to recap right there, so I've just marked on the low of the previous monthly candle. So we've took that low, so this could be looked at as liquidity. All right, so the main idea is we could start to continue up from here. Okay, so that's reason number three right there, the fact that we've took out that low. All right, if we go to the 4-hour time frame, as we spoke about, the 4-hour is bearish. We know that for sure just by reading price action and reading structure. We've got the high, we've got the low, the lower high, the lower low, and the lower high, and then the new lower low was formed. Okay, obviously the main difference being of this lower low is the fact that we have took out that previous monthly low, and we've now come back into this daily demand. Okay, so as you can see here, we are starting to push out of this region once more. If we go down into the 1-hour time frame on dollar, we can see that this 1-hour candle is looking like it's going to continue bullish. One thing I don't like about this structure is the fact that the 1-hour candles, or the 1 hour, sorry, has failed to close above this high. Okay, now of course we've got this current 1-hour candle in motion, obviously still in play. So we could be doing that right now. If we do close above that high, then the 1 hour would have gone back to bullish, which is in alignment with the daily time frame, which is in alignment with the weekly time frame. Okay, so we want to be aligning the structure together, because obviously that's going to give us the most probabilistic scenarios. Okay, going forward. All right, so with the dollar potentially going bullish, what we could expect on euro dollar is bearish momentum. So let's go into the euro dollar, and what do we see? So obviously we're within this 4-hour imbalance still. Okay, which could be acting as support. Okay, one thing I am looking at though is the fact that we haven't come down into a discount of this entire leg, which we still could do. Although we can see that this 4-hour imbalance is looking like it's acting as some pretty decent support right now. The previous 4-hour candle closed a bullish hammer with a nice wick to the downside. And obviously this is the current 4-hour candle. We've made that high. We've got 2.5 hours left of this candle to close. So is it now time for this to go bearish and close down here? Or are we going to continue up to potentially reach this 4-hour imbalance as we highlighted together earlier on today? If we just let this load, there you go. Right there, so 4-hour imbalance right there. Okay, the nice thing about this as well is if we do continue higher, we've got these highs right here to take out. We've got trend line liquidity, relative equal highs, whichever label you want to put on that. We can see that that could be a very nice area for price to target if we do continue to the upside. Okay, so if that is the case, then the DXY would obviously need to come down. And the nice thing about that theory is the fact that we do have this 8-hour imbalance below these lows right here. So we've got every reason to come down here. Okay, although, like I said a moment ago, we've got reason for price to go long, we've also got reason for price to come to the downside, given the fact that we've got that imbalance still out in the open, so to speak. Okay, so obviously if that is the case, then euro is going to continue higher to reach, as a minimum, that 4-hour imbalance, and then essentially just wait for this to load up, as a minimum there, and then potentially reach that high there, in fact, to take out that liquidity. Okay, so that's what I'm looking at. Okay, the only thing that, like I said before, I would like to see is a discount of this most recent 4-hour leg, but price doesn't always have to do that. Right, so why does it not have to do that? Well, because if it's a very strong trend and it's got strong momentum behind it, it's not always going to provide a pullback. It's not always going to provide the picture perfect setup. Okay, it's just not going to do it. Because at the end of the day, the market makers aren't going to make it very easy for us to make money. If it was easy peasy, then everybody in the world will be millionaires, that trade, etc., etc. So there is going to be nuances and things that could happen and things that we need to be aware of when we are analysing the markets, okay? So this is why, when I step to the markets and I'm analysing it in this sort of way, I've always got 2 scenarios or 2 or 3 scenarios in mind. So I'm not just thinking about one thing that it could do. I'm thinking about, right, if that happens, then that could happen. But if that doesn't happen, then X, Y, Z might happen. Okay, just for example right there. Okay, so that is euro dollar in a nutshell. Okay, and also just to recap as well, for those of you that have just joined, if you didn't catch earlier on in the first afternoon session, when I was discussing the 12-month time frame, the fact that we're coming out of that strong area on the 12-month could be an indication that we do want to just continue to the upside and leave the imbalance to the downside. I'm just waiting for the chart to load here. There you go. Because like we were saying before, yes, we do have this monthly imbalance still out in the open, which it still could get reached. Okay, I actually do like this in terms of the technical aspect. Number one, because it's within a discount, and number two, it's an open imbalance with liquidity above. But that doesn't necessarily mean it has to reach there, because like I've said, we're coming out of this yearly imbalance. So there's going to be a lot of momentum behind it. So we could easily just continue on and break these highs right now. However, if we don't do that, then there's a possibility that this structure right here could remain intact. So therefore, this would be the high, this would be the low. So in this particular case, we could argue that we are in a premium of this leg to the downside. And like we spoke about before, there is a 4-hour imbalance right there. There isn't one higher in this leg. There isn't one lower in this leg that's fresh. That is the only fresh 4-hour imbalance. So if that structure is to remain true and is to remain intact, then what could happen, so again, notice how I'm doing multiple scenarios in my brain right now, we could reach that imbalance right here. I'm talking about this one here. And then continue to the downside, potentially break that low, and then follow this blue structure. Follow suit with that, okay? So I know it's a little bit messy when I'm starting drawing everything on, but I hope that made sense, the sort of idea of that, okay? So just to recap, we've got a 4-hour imbalance resting above the high that we've just created on Monday, in fact, this week. So this is the high of the week. We've got the 4-hour imbalance above. This is in premium prices of daily bearish structure. As you can see there, I've got the imbalance visible on the daily time frame. You can see it right there, look. So we could use that to potentially roll to the downside. However, until then, I'm still bullish, and I do believe we can continue higher, given the fact that this 4-hour structure is putting in higher highs and higher lows. All right, so that's euro dollar. Let's move on to pound yen. Okay, so pound yen, we are still in active positions. We are in 3 positions in total right now on pound yen. Number 1 being this out of the low, okay, which is now free of any risk, going for a 1 to 3 on that, which does actually require price to make a higher high relative to this high, which is not impossible. And we are in a sell from this 1 hour imbalance. Price provided the entry model. We had a 5-minute break, a body break. So we're in that short, and then price came down into this as well, which then provided another opportunity to go long, which is why I've took the opportunity to go long. Okay, so there's a few scenarios what could happen here as well. Scenario number 1 is we continue to climb and reach TP, which would be a 6% gain. Obviously, this would be a loss at that point. Therefore, we want to be doing 6 minus 1, which is 5%. So that would be a 5% gain. Okay, minus the 2 losses at the start of the month on Monday. So we'd be up 3% for the month. Okay, that's if we go higher. Scenario number 2 is if we continue to come lower from where we are now, reach this TP, which would be a 1 to 3. This would hit stop loss, so that would be a 2% gain. And whether or not we reach that break even, we could even come all the way down, near the entry, reach that TP and then go up. So that's a scenario as well. Okay, so for now, I'm just holding fire. There's no other trades by the looks of it that are going to happen. The only other area I would be looking at, obviously, as we all know, I don't like to take trades after 4 p.m. So that's in 19 minutes, 20 minutes basically. The only other area I would be looking at is this area, but I don't think we're going to reach there in 20 minutes anyway. So that's us done for the day, essentially. I'm leaving all of the positions open. Like I said, this is now risk-free. This is open and this is open too. Okay, so on the 5-minute time frame, then let's talk about the entry of each position. So all the way down here, this was the bullish trade from the bottom. So the buy trade from the bottom. So if we go to the left hand side, this is this one I'm talking about right now. So what we did is we came into the 1 hour imbalance and then we closed above this lower high here. So this is the entry model for this system, like so. Okay, so the candle that closes above is the entry. So you can see there the entry was on yesterday. It was 3:15 p.m. Okay, stop loss below the low. Price sort of played around, consolidated, whichever word you want to label that. It just went sideways basically for the rest of the day. And obviously you can see here Wednesday, brand new day. Price came up during Asia session and then London session continued to the upside. We then ran into this 1 hour imbalance, as you can see here, this blue box. And then price broke a minor structure. That's the entry, stop loss above the high. Okay. Simultaneously, as price went up, it created a bullish 1 hour imbalance. And you can see price obviously dipped back into there as well and then broke structure once more, which gave the entry to go long, okay, which gave the opportunity to buy. So it's as simple as that, guys. It really is. I'm just playing around with the 1 hour, coupling that with the 5-minute and going from there. Okay, so it's a very, very simplistic way to look at the market, but as you can see here, very, very, very good results. As I've said before, as we were talking about in the session at 1:30 p.m. today, I've started to look into 2021 as well. Just bit by bit, just continuing to gather data. The more data, the better. Although I am confident enough to go live on it. This is why I'm live on it. But yeah, the more data you have, the better, realistically, because it gives you more of a perspective of what the system can produce over a longer period of time. And as you can see, fairly consistent, which is very, very good. It's what I like to see when developing a system, is the consistency aspect of it. We don't want too many, ups and really, really low downs, and then a few ups and some more low downs and all the rest of it. Whereas this is consistent. Okay, we've got a couple of break-even months, yes, but all in all, you can see there, look, 2022, 114%. That's with 1% risk. 2023, 104% gain with, again, 1% risk. So, realistically, any fund, so to speak, a good return on investment is 2 to 5%. They'd be happy with that. So these are really, really good returns. And, not only that, the returns that we're making within UKTA, coupled Henry's results and my own as well, you can see, I think March we had a 25% month, April was 13%, and May was a quiet month, but that's going to happen within trading. It's not all glitz and glam. It's about just being consistent and just managing that risk, really. That's what it's all about. So that's pretty much wraps this live session up. Just want to thank everybody for tuning in. For those of you that did tune in live, it's very, very much appreciated. Any feedback is appreciated as well. Do feel free to, as always, pop any comments you've got in the Discord, any questions, etc. Because obviously that's your point of contact with us now. Now that we've sort of done away with the WhatsApp. So yeah, without further ado, thank you again for tuning in and for watching. I hope you gained some value from this. So just to recap, we are holding these trades open. We've got 3 trades open with myself. I believe there's a trade open with Henry. I'm not too sure. But I know for myself there's 3 trades. I'm holding them open. And what will be, because this is what we're playing with here, the results. I'm not too worried about the individual trading day results. I'm interested in the overall months, the quarters, okay? And this is why I've got here as well, consecutive wins, consecutive losses, just to give myself, or give my psychology that boost whenever it's needed. Because, when you do run into drawdown periods, which it does happen, you can comfortably look back at the data and say, okay, well, for example, there's months here where we've had 8 losses in a row. We've still ended the month 5%. 8 losses in a row here. We've still ended the month 7% up. Okay. And the story goes on. You've got 8 losses in a row there. You've ended the month with 9% gain. Okay. Yeah, it's been a phenomenal year so far. So hopefully we can carry this on and start to really reap the rewards of this system live. Not just for myself but for the members as well. Okay, because that's what it's all about, growing together and making money together at the end of the day. Okay, so thank you for watching once more, and I will catch you all in tomorrow's live sessions. So it will be 1:30 p.m. for myself and 3:30 p.m. for myself as well. And obviously you've got Henry doing the mornings. If there is any change on that, we will let you know. But yeah, I'll catch you in those sessions. So thank you for watching. Trade safe, and I'll speak to you all tomorrow. Take care. Bye-bye.